45 years, zero name changes, new offices, more staff, improved technology to better serve you. Education, services, investments. Think real estate, think Marshall Reddick. Brokerage, property management, private lending, creating financial independence through real estate since 1979.
Thank you, everybody, for joining again tonight. We were just having a fun little discussion about football, but we are very excited for you guys to join us so we can talk about the newest Marshall Reddick market, the Dallas Metro. Now, that being said, we've had investors investing in Dallas for a very long time, but we're kind of really ramping up here at Marshall Reddick. So my name is Cameron Carlson, and I will be presenting alongside Eric Douglas, who will be the keynote speaker for tonight. And thank you guys again for coming. Please feel free to type in the chat your questions, let us know comments, things along those lines. We do see those, and if we don't answer it during the presentation, we'll make sure to stop and answer some of those questions at the very end. But without further ado, a little about me. I've been with Marshall Reddick for about 4 years now. I'm a licensed agent here in Newport. I am a husband and a father of my sweet little 4-month-old baby girl, who is just, man, having a kid changes things. And it's been cool just seeing her start to grow up and just realize the, connection that I get to have with her. So that's been fun. I own my own primary residence. I invest in real estate. I've done transactions in 8 states, and a lot of what I do too is I also connect and talk with prospective landlords who are looking to know more about what property management should be and what that looks like, and I help them find a home here at Marshall Reddick. And then I'm also an investor in the Marshall Reddick Mortgage Fund, and I've done sales all throughout the country in Marshall Reddick offices. And yeah, that's a little about me. Now, for some of you, you might be familiar with Marshall Reddick, and for others of you, maybe this is your very first time hearing about us. Essentially, we are a full-service real estate firm, and we have 4 divisions within the company. The first division is we're real estate brokerage. So we help people buy and sell their primary homes, as well as buy and sell investment properties. And nationwide, I'd say we did around 600 transactions last year, and 90% of the investment transactions we also manage. And that brings us to our second division, which is property management. Essentially, we take care of everything for the landlord, from leasing to maintenance to renovations, rent collections, and much more. Basically, all you need to do is collect a rent check every month. That's it. And the third division is private lending. So sometimes if you can't qualify for a conventional loan, you're going to need some private financing. And Marshall Reddick provides non-owner occupied real estate loans to borrowers doing fix and flips, new construction, purchasing investment property. So if you guys see those HGTV shows where they, fix and flip properties, we actually we might be the lender on some of those transactions because we do lend to HGTV stars, which is cool. And then the fourth division is mortgage investing. So the same way that you can own real estate and collect a rent check, our investors own mortgages and collect mortgage payments. I personally invest in the Marshall Reddick Mortgage Fund, where I don't need to think about it. I basically just get a quarterly distribution for investing in a pool of capital. And so within all of this, I am an advisor here at Marshall Reddick. So Marshall Reddick's located in 10 major metros across the United States, and you can see those here on the map. We've got Los Angeles, Newport Beach, New Braunfels, San Antonio, Dallas, Texas, which we're excited to talk about today, Houston, Austin. In Tennessee, we have Clarksville and Nashville, and then we have Cape Coral, Florida. And you may wonder, why these states? Why these markets? Well, as an investor, it's very important which market you choose. And there are several reasons why we selected these ones. We want to make sure that we're looking for markets with strong economic growth, low unemployment rates, and a stable jobs market. Next is we also want to make sure that, there's high rental demand. We want a place where there's low vacancy rate, a lot of pools of renters. These are markets that are very landlord friendly. They have a good ratio of renters versus homeowners. They're usually markets that are diverse in economic industries. We like to see a variety of essential industries like military, medical, insurance, communication, IT. That way it's not all wrapped up in just one industry, and when that one industry is gone, so is the market. That's very important. Also, it's important that the market has a low barrier of entry. Our house is affordable for investors. Maybe the suburbs have more affordable, family-friendly neighborhoods, and we'll talk more about that in the presentation. And last really want to see a good education system. This leads to well-educated tenants and more desirable school districts. Maybe there's a university, maybe there's several universities in the market. And then one of the most important criteria is property management. There should be a good selection of property management companies that are competitive within one another to produce really good service. You don't want to be stuck in a situation where you have a bad property manager and there's only one or two other companies nearby to choose from, and their service isn't much better. And so those are kind of the criteria that we utilize when choosing a market, choosing an office to kind of like plan our routes. This here is a snapshot of some of our teams. Top left, you've got New Braunfels, and I think San Antonio piled in there. You've got our Austin, Dallas team at the top right corner. Bottom right is going to be Tennessee. You've got California, some of our admin staff there in the middle. Left side bottom is going to be our Florida team. And without further ado, I want to pass the baton on over to Eric Douglas to continue the presentation.
Thanks, Cameron. Great job. All right. Hello, everyone. My name is Eric Douglas. I'm super excited to be here. I am a proud father. My wife's name is Tiffany. We've been in Dallas since 2008. I am from Los Angeles. Now I live in Texas, right? So I have 20 plus years of real estate investing experience in several markets. I started investing in Los Angeles, started in Cerritos, buying my first two properties out of college, and then venturing out to other markets. And then I became aware of Marshall Reddick through my brother-in-law. And so once I joined the Marshall Reddick network and started attending the webinars, talking to my advisor, that gave me a perspective on how to create an investment portfolio. It gave me my foundation to be successful as an investor. It gave me a foundation to be able to establish goals and marks to be able to generate income, to generate generational wealth, and also to see a path towards retirement, right? And so today, throughout my entire investing career for the last 20 plus years, I've had over 25 transactions, which include from flips to purchases. And I've only sold maybe 5 houses, right? My philosophy is to never sell unless there's a deal that screams at me to say sell and do a 1031 exchange, or there's something that's better out there for me. But then having a 6-year-old daughter, it changes my strategy a little bit. Talking to my advisor, understanding what my outlook look like for my family, for my retirement plan. So all of that said, Marshall Reddick most definitely is the reason why that I am a successful real estate investor today. And I know you guys see the last bullet point. It says I was a chicken farmer, right? So not necessarily a chicken farmer. That was ran completely remotely. My uncle, a military vet, says, "Hey, Eric, let's buy a chicken farm." I said, "A chicken farm?" And I said, "Well, let me think about it. Everyone eats chicken, so why not?" So I invested. I was in Texas. He lived in Kentucky, and so we did it for a couple of years, and then right away we got out of that business because we realized the money wasn't in the chicken. It was actually in the manure of the chicken. So that's a nice little twist in my story of who I am today. But my investing journey has been great, has been wonderful. I have a wonderful team around me, and that starts with Marshall Reddick and my team of advisors, and also people around with the staff as well with Marshall Reddick. So, all right, so here we are, Dallas Fort Worth. So why Texas, right? Texas has the second largest population state in the U.S. with 30 million. It is a landlord-friendly state and has one of the lowest default rates. And we noticed that throughout COVID, right? And then insurance premiums are lower, particularly when you're dealing with newer homes. The north side of Dallas, Texas, is considered the county is Collin County. So you might hear me reference a lot of California cities and compare Collin County and North Dallas so that you guys have some readabilities for those of you who are from California. But when I first moved here in 2008, my realtor at the time said, "Hey, go north." And so the north is like North Texas. That's going to be your Plano. That's going to be your Frisco, your Prosper, Salina. That's all north, right? And so I listened to him, and that's where I started to invest in the north side of Dallas, right? Um, One thing about North Dallas is you guys might have seen it uh, a lot of times labeled Frisco, Texas. A lot of people get that confused with San Francisco, but it's spelled completely different. So it's Frisco, Texas, and that is considered to be somewhere like Anaheim type area, right? And so we get down to the more of the details of that area once we get down there. One important thing here is there's 428 people moving to Dallas, Fort Worth every single day. And out of that 428, there are 108 people moving north every single day. When I first moved in 2008, the reason why my wife and I selected Dallas was we got a sense of LA with the diversity, with the people that we interacted with, the newness of some of the infrastructure. So that LA feel, minus the mountains and the water, made us believe that this was going to be the next Los Angeles. And so it's on its way of being there. So next slide. Okay, why Dallas, right? So Dallas is ranked #1 in U.S. Metro for corporate headquarters. It's a business-friendly city, right? No state taxes. It's also business-friendly when it comes to starting a business, and it's also one of the most diverse places in the U.S., right? One of the things that Dallas has, it enjoys a very diverse economic base, from banking, commerce, insurance, telecommunications, technology, energy, and healthcare. With that diversity of businesses, once there is some economic shifts, like we experienced in 2008, 2009, and probably a little bit now, Dallas is able to withstand those type of shifts because of the diversity in the market, right? People are moving here because of the jobs. People are moving here because of the business friendliness and lower cost of living. So it's a growing place, and it continues to grow. I see the cranes as I take my daughter to swim practice, to the gym. It's just constant construction from 2008, and it hasn't stopped, and I don't see it stopping anytime soon. All right. Going back to why Dallas, right? And so those are some of the points that I kind of talked about earlier in terms of top 10 global cities for economic strength. We talked about that because of the diversity of the businesses that are here. Number three, best U.S. cities for construction workers. I see it. I see constructions all over the place. And then top metro for Fortune 500. There are 24 Fortune 500 companies here that are headquarters here. One notable one that a lot of California people are known to hear about is Toyota. Toyota moved from Torrance and moved right up the street to Frisco, and they moved their big headquarters right here off the 121 highway. And so with that transition, I think that brought in a new host of California residents. And so I love it. When I go to Costco, I see people with their LA hats, their Anaheim hats, and so you can see and feel a California presence more than ever before. Now, Frisco, Texas. Frisco is one of the more popular places. It's the #1 best suburb to live in Collin County, #1 best for remote work, #1 safest place in the U.S. since 2023, and top 100 places to live in the U.S. I do own a home in Frisco. This is where I moved to in 2008 with me and my wife, and so we've seen it become a small knit community to what it is today. Frisco is built for convenience. It's built for families. It has an amphitheater. It has parks. It has biking trails. It has wineries. So it has all these different activities for a family to enjoy outdoor living space. And so it's been a wonderful place to live for families, especially young families. So Frisco most definitely is one of the places that you guys will hear more about as it continues to grow and expand. There's a lot going on there. But yeah, I think Frisco most definitely is one of my favorite places to visit when I head that way. I currently live in Prosper, but when I head out in Frisco, we go across to 380 to visit, and that's where we kind of do all our entertainment, go shopping, things of that nature. So, okay, so the Dallas appreciation trends. One of the biggest things here is when I referenced before is how diverse the economy is in Dallas, right? I wanted to point out activity in 2028, in 2008, 9, 10, right? I did some statistics on this, and if you guys can see the number, I know it's fairly small, but in 2008 and 9, you can see there was a negative, 3.38%, and in 2008 it was 3.38%. Now, in other markets such as Los Angeles and Florida, they experienced a negative 32. Florida experienced a negative 32% appreciation, and Los Angeles experienced a negative 49% appreciation, right? And so I just wanted to point that out just to show you and demonstrate how strong the economy here in Dallas based on the diversity of businesses here. But fast forward, move down into 2023, where we had a slight dip in appreciation just because coming out of COVID, a rebalancing of the economy. But like I said, I continuously hear and see growth. I see the cranes, I see the activity, the news articles, the reports. It's a very strong market. We continuously to build and innovate and bring in new businesses here on a daily basis. One thing to note here is just like anywhere else, pay attention to the left side of the slide. Dallas has, your occupied versus vacant. So, the large percentage of primary homeowners in the market, low vacancy rate between 10 to 12% of all types of homes, right? Certain areas may have as low as 6%. Second largest percentile in homeowners over $1 million in Texas. So roughly about 88%. So a lot of homeowners are owner occupied, but then as you go to the right side of the graph, you see a heavy amount of renter occupied homes, right? I can tell you this, my properties here that I have in the Dallas metro area, if I do have to turn it over, the longest it takes about 2 weeks to find a new tenant. And then the activity of new tenants and activity of inquiries is very high. So I can most definitely validate the Texas market in terms of, the renter population is mostly present and growing. I saw statistics not too long ago, and that the average age for people buying their first home has now moved to age 38. So which tells you that people are going to be renting longer because of the affordability. It takes a lot for an individual to come up with a down payment for their first home, right? And then with rent the way it is in terms of the amount, it's difficult to save for some people wanting to own a home. And so I think there's a trend of more renters, and there's a debate of over whether I should rent or buy. And I think the renting conversation is more prevalent now just because of inflation and the cost of things. I want to go back to the Dallas and the population, right? So, and the cost of living, when I moved here, it was very, very cheap, right? It was, I thought my wife and I thought was, well, let's move to Texas. And because of it was very inexpensive to live here, then we can fly and go on vacation and travel. But fast forward till today, the cost of living has most definitely increased, just like it has across the country, right, with inflation. But Dallas still has one of the lower cost of living ratios, right? It has a younger workforce. It has low unemployment, and Dallas still ranks low as far as average affordability in the United States. But overall, hands down, I take Dallas over any other market, just because it's now my home. But it feels good in terms of the cost of living is not that bad, especially with there's no state taxes. So, all right. So upcoming projects, right? So this is a huge, huge project that's coming in Frisco. It's a Universal theme park. It's for kids that are 1 to 11. It's a 97-acre theme park that will be designed for young children. And it's one of Universal's smaller parks, but it's going to feature, it's like a resort. And so I can see that, like I said, as I take my daughter swimming or to her different events, I can see the structure. It's right off the freeway. You can't miss it. It's going to include themed dining, 300-room hotel. This construction is there. You can see the hotel is there right now. You can see cranes. You can see the individual structures being built. It's kind of interesting to see. And it's projected to produce about 2,500 construction jobs, and it'll boost most definitely tourism. I like to consider like this area to be something like Brea Park and like Knott's Berry Farm, Anaheim, right? This is how I compare Frisco to a place in Los Angeles, right? But it's in the early stages of what Knott's Berry Farm used to be in terms of the homes there, and so you're starting to see that being built out. New construction is happening right across the highway, which is called the Field, which we'll get into that. But this most definitely is a wonderful thing that's happening in Frisco, and everyone is excited about the theme park. There was some people that were not agreeing with the theme park because they were thinking, well, too much noise, the traffic, and so, but they went ahead and passed it. So the construction has started. It's not that it's going to be like your traditional, like a Six Flags or something where you have the big roller coaster. It's going to be for smaller kids. So it's going to be a fun thing to see. So I'm excited to take my daughter there once it's up and running.
Yeah, that's awesome. Aren't they making Disney as well or something along those lines?
No, not Disney. No, I think people get confused with Disney versus Universal theme park. It
Oh,
has
got
been
it.
some rumors of a Disney, but no, not that I'm aware of. So, um, but I
Just
wish they
rumors for
did.
now.
Yeah, yeah, I wish they did, right? So, the next thing is a fields development. Now, this development is humongous, right? This sits right across the street from the Universal theme park. So it's 25-acre master plan community. It's going to have 10,000 homes, commercial spaces, education center, parks, biking trails, expected to create about 30,000 jobs, dozen of new retail space. Um, and what's already there today is the PGA of America. It's a and then Omni Hotel is a resort style golfing community. It's a wonderful setup. Me and my wife and my daughter, we go there and watch. They play movies during the summertime when the weather is nice. So you can sit out and you can see the golf course span over the horizon. Then they have the Omni Hotel with little suites. So for big golfing fans, they can go out and go golfing right from their room onto the golf course. But it most definitely is a sight to see. The picture that you're seeing, that's the construction that I'm seeing as well in terms of how massive this project will be. The homes are being built today, and those home prices are starting at $2 million. This development is I live in Prosper, so it's about 5 miles away from where I live at today. But you can totally see this shaping form to what the picture looks like, right? I would probably guess to say that this development, I still want to go back to before Anaheim and Knott's Berry Farm. For those of you in Los Angeles, I would probably compare all of this to something on the lines of Anaheim mixed with Brea Park, right? Um, but yeah, it's people were getting excited about it. Like I said, Frisco Frisco's development team has done a wonderful job of bringing in this development with investors. So The second thing that's coming here is Goldman Sachs, which is going to turn Dallas into its own financial hub, right? Texas is going to create their own exchange. So this is going to create something similar to the New York Stock Exchange, with Texas has it having its own exchange. That's a huge deal because what it's gonna bring in a whole nother level of residents. It's gonna bring a whole nother level of financial boost. Um, Goldman Sachs, they invested $500 million in a campus. It's going to be 800,000 square feet, and it's expected to be done by 2028. Um, it's going to be positioned right downtown Dallas. Um, so you'll be able to see that right off the highway. In addition to this, in that area, they're building a Central Park. For those of you who've been to Manhattan, New York, they're creating a Central Park to mimic what's happening, what New York has, right? So just picture a Manhattan, New York feel move to Dallas, and that's already been under construction. It's going to boost employment and also downtown economic activity. So upcoming investments. Here are some investment opportunities here. Edgewood Estates and Midlothian. And it's Midlothian, like as in Nickelodeon. So it's right 20 minutes, 30 minutes from downtown Dallas. I would consider this part of town to be something similar to, I want to say, Fontana, with the potential to be a Corona, right? Actually, I just sold a primary home to a family in Midlothian a month ago. So I've been down there several times. These are ideal because triplexes and duplexes in Dallas are rare, right? You don't have too many of these new construction type of investments in Dallas. If you do, they're older, and the quality isn't the same, right? But I was excited when these popped up because you just don't see these, right? I was looking for some duplexes last year, and I ended up purchasing some duplexes in New Braunfels. But these are great. It's a great location, great product, convenient to Dallas. It's just 30 minutes from downtown Dallas and also Fort Worth. The job market is strong in that area as well. And then it sits on an acre lot. You don't see that very often in Dallas, or even at all. So I'm really excited about this product and what the builder are doing and what we have to offer here. So we get into the numbers. So just to give you some geographic location of where Midlothian, Texas is. It's most definitely a place that is growing and expanding. It's attracting more tenants. It has quality shopping, has dining. It's a great target for whether new or seasoned investors. It's at the point where you're not too late, right? This is a sweet spot of when to kind of get in. It's currently under construction. They have a few units already up and running with some rents coming in, and it's about they're still in their first release. They plan on building a total of 64 units, combining both triplexes and duplexes. I can tell you in location, just to give you a little nugget, the high school football state championship team is actually 10 miles away from Midlothian. So, and that's the 6A high school football champion team. It's a nice area. Like I said, I've been there. I had a primary home purchase out that way for a couple. They love it. So it's a nice growing area. Like I said, for those of you that are familiar with California, it's has a potential to be like a Corona, California. So.
Yeah, if I may add, I think one of the biggest things that we're pointing out here, especially when we mentioned earlier, where do we target as far as markets go? So we take these big markets and we look at the suburbs where it's a little more affordable, because obviously $1 million homes are not as easy to cash flow. But when we find these suburbs where you have maybe some newer products that are, a little more cash flow friendly, people are still willing to make the commute to Fort Worth, make the commute to Dallas. There's even a lot in and around Midlothian and some of these similar suburb markets. This is when we find the best investment opportunities. Good school districts, like Eric was mentioning, those are all factors when we're choosing a market. And so that's kind of why we want to present one of those suburb markets that we've been looking at recently.
Yeah, that's a great point, Cameron, because when you start looking at the activities in the North Texas area, it's going to cost a lot more, and you're only going to be able to get a single family residence, right? So the point of investing is to get in at the right time and then also location. And so the triplex option and a duplex option has both of those, where it's not too pricey. So we get into the numbers here. So this one is listed for 975, which is still under $1 million. And we do have a down payment amount of 30% of 292. And then from here, we can see that the rent amount is going to be at 72.50 per month. And then the more important thing is with the builder relationship that we have, and also working with Reed Hazard on the rate buy down, we actually could get these at 5.25%. That's a critical deal, because that is why you can see the cash flow. In today's market, it's difficult to cash flow, right? Because of interest rates, insurance, taxes, and so this is very important to note that these triplexes actually cash flow, right? We've also included the taxes, insurance, also the Marshall Reddick property management fee in there as well, HOA, and also there are some utility fees because this one sits on a septic tank. But overall, if you can see the green, it cash flows with 30% down.
And I just saw a question come in just asking where we got this pro forma from. So all of these pro formas that we ever have on our webinars, they actually come from properties on our website. So if you go to marshallreddick.com, click on invest and properties, you can search, you can filter, you can find different investment opportunities on the website. For those of you in Orange County, you're probably having some lightning and thunder too. Don't know if you heard that in the background. But these properties, you can customize the numbers. So if you say, hey, I want to be conservative, what if it's X amount in maintenance percentage? Or what if the rents are a little less? Or you can say, what if I offered it at a lower purchase price? Or what if I put 25% down? You can run all of those numbers, and they're all editable variable fields on the website, and it'll show you the outcomes and the different cash flow production on the website. So, and we can talk through that more later. In regards to the 5.25% interest rate, those are forward commitment options. So a lot of times when we're finding these investment opportunities, we're looking for creative ways to get you cash flow, because typical property purchases right now in the market just aren't cash flowing with the way rates are. So we're finding developers who are willing to offer and buy down that rate, and that's what we're seeing here. So they're offering a rate that's below the 6.5% standard rates nowadays, or it might be a little higher for a par rate, and they're willing to offer a 5.25% rate in partnership with Marshall Reddick, saying, hey, we're going to work to pitch your properties. We want to make sure you give our investors a good rate so their property and cash flow. So we can get more into that later, but just wanted to explain a little more about what you're seeing here in the pro forma. Anything to add to that, Eric?
No, that was perfect. I think one thing to note here is just to look at the growth potential with the triplexes. These are 1,800 square feet per unit, right? And so you can understand to see where there's room for rental increases over time. And then you combine that with a refinance once the rates drop in a couple of years. But yeah, I think this is a recipe for a successful investment opportunity, especially early on. And like Cameron said, work with your advisor and play around with the numbers. See what works best for your budget. See what works best for your plan. See what works best for your family and your financial future. Like I said, these do not come around often per se. And these are difficult to find, especially here in Dallas. Go to the next one. And the second option is going to be your duplex option here. These are going to be 713 with 30% down. You have to bring in 213,000. The rent it's the same thing as a triplex, just minus one of the units, one of the doors, right? I think it still offers a 4.25% financing rate. The monthly cash flow here is going to be 430.35. The utilities, which is a septic system, is going to be a little bit less at $50 per month. HOA, management fee, everything's going to be the same. You have a different amount of a payment because it's a lower loan amount, right? But we've done our best to kind of project out what the ROI looks like for this property. And anytime you're investing, it's not a race, it's a marathon, and that's why we have the 15-year projection, right? I know everyone has their fingers on a lot of data and numbers to look at how properties are performing, but really just let it work itself out. Over time, you would look up and in 10 years, you're like, wow, this was the best decision I've ever made, right? Investing is not, it's not a, like I said, it's not a race, it's a marathon. So, like I said, here at Marshall Reddick, we do our best to project out and mitigate any risk, any concerns, to give you an idea of what this investment will look like according to your plan and your strategy. So
Yeah, absolutely. And if I can just add to that too, we had a question come in just saying, hey, where do you guys get the rent amounts? Where do you get the tax amounts? Where do you get the insurance amounts? And to touch on that, these are all, as far as like things like taxes and insurance, these are just based on, we're pulling records. We have an idea of what the actual tax rate is in the area. We call our insurance agents. We have them partially underwrite what the rates would be on a property like this as an investment. That's where we get it. All of these deals are underwritten in-house. And so we upload those on the website. And then as far as rents go, we run rent comps. We pull rent comps. We see units that have already rented. We know what the values are. We sell some of these we manage. So that's where we get our values from. Did you want to add to that, Eric?
yeah, no, I agree with you 100%. I think, we have access to tools and technologies to be able to pull accurate numbers. Like Cameron said, we can pull the rent comps. We work with the builders. They know the area. It's all available for us to pull and to put into our Marshall Reddick calculator to give you what you see today. So there are some variables here, which, it could be vacancy percentage, it could be the rental increases. We can't really predict when and how much rent increases will go, so we just keep it the same here. But those are some variables that are not going to be consistent, but we try our best to keep it the same. I think at the end of the day, when you look at the 15-year projection and profit, I mean, you're doubling your money, right? You're getting an annual ROI of 19%. So I think, for those of you who are on the call, understanding investing and the essence of time and how that works, and the buy down of the mortgage from your tenant, the increase in appreciation, a strong rental market, a strong job market. I mean, this is a recipe for a very successful investment, and I'm telling
Yeah.
you that from experience.
Absolutely, yeah. Eric's the guy to talk to. He's done real estate investing for a while. Another question came in regards to what other like rate buy downs and incentives are we seeing out there? That's a great question. That's our job. Our job is to find it. Our job is to continue to look for it. It's not very common. That's why when we have these amazing opportunities, we want to put them in front of you because it's not every day you get a 5.25% rate on a brand new property, which makes the cash flow look better than they call it pre-owned properties in Texas, but a property that's not brand new that you have to go get a 7% interest rate on. So we absolutely will bring more and more inventory, and you can find those on the website and things along those lines. But when you reach out to us, we get a little more of your criteria in your buy box. Maybe we're able to tailor our search more for what you're looking for as well. And kind of want to just talk about, we mentioned property management earlier, but that's one of the biggest things with your investment, right? You know, everybody says that you date your realtor and then you marry your property manager. Well, it's true, right? And at the end of the day, it's nice having the ability to have everything with the same company. It's a very, very smooth transition. Eric will help you underwrite the deal, help you find the property, help you close on the property. And it's not like, okay, well, what's next? No, we have property management. So a little bit of our philosophy, the best way to explain it is we believe we should only make money when you as the landlord makes money. And so there is a percentage of the rent collected that's charged as the management fee, and it's only charged while it's occupied, it's while there's a tenant in place. So there's no tenant, there's no rent collected. It's almost like an incentive for us to make sure we get a renter in there quickly. And then as far as fees go, very simple and straightforward. We have our management fee, and the management fee decreases based on the amount of doors that you have. For instance, for our apartment owners out there, management fees are lower than for just a single family residence. And you can kind of see the sliding scale there at the bottom of the page. And then to lease the property, it's half of the first month's rent, very standard, but it's going to be someone like Eric who's leasing your property. So it's just like a sales agent. They have we're licensed agents. We have professional photography that we take for the properties, and we only do in-person showings. No lockbox showings, letting people in. We always want to do them in person and post on all the biggest marketing websites, Zillow, HotPads, Rent.com, Redfin, MLS, just to get you the most exposure. And like I said, I'd love to talk to you more about property management. We have about 2,000 doors now in Texas and continuing to grow, especially here in our Dallas market. So if you have more questions about property management, we can kind of go over those more and more. And so in regards to the Dallas market, you might be wondering like, hey, where can I find even more information on Dallas? We actually have on our website a free data packet. If you go to marshreddick.com/Dallas, boom, you've got it. It's really cool. We'll give you a lot of data points, charts, upcoming projects to look out for in Dallas, and just go even deeper into what we've been talking about tonight. So feel free to go on our website, check that out. Same thing goes for just about any Marshall Reddick market. We're going to have a data packet, and those are refreshed every single year. In general, when we're talking about, well, what property am I looking for? What fits my criteria? A good place to start is read the Marshall Reddick ebook, marshreddick.com/ebook. This is like the Marshall Reddick Bible for real estate, I like to say. You can go into the ebook, really dive in, understand what property classes are, how they affect your ROI, how they affect the type of tenants to expect, your cash flow, your long-term appreciation, and maybe that'll kind of tailor what you're looking for as far as a property search and your investment. And then now when we have a conversation, you have a good understanding when we say, hey, are you looking more for A class? A class might be a little higher appreciation, less cash flow. Are you looking for C class? C class, I like to say, stands for a little more cash flow, a little less appreciation, and B class is a little bit of both. So it'll help you find what you are looking for in an investment property. And then take a look at what people say about us online. The same way, if you guys enjoyed the presentation tonight, please feel free to let us know. Go on our Yelp page, comment, let us know how we did. That's super important. A lot of our business comes from referrals or just people hearing about us, just like a lot of you guys did. So let us know. Check out our social media sites, and we're going to dive into questions here, but this is our contact information, and this is kind of a little basis of what it looks like getting a follow-up consultation call. Right now, we're just, chatting with you guys and not really one-on-one, but we'd love to meet with you on a video call, share our screen, go over specific property picks, understand your situation, what you're looking for, so we can help better assist you to find that next investment property. But this is our contact information here. And now I kind of want to dive into some questions here. We got some questions coming in, but Eric, any closing notes before we dive into questions?
No, I appreciate the time. Like I said before, I've been with Marshall Reddick for 18 plus years, and it has a question mark where it says, why goal setting? I still use the same form for 18 years of setting goals each year of when I want, where I want to be financially, and so I still use that same sheet that I got it from my advisor. Leverage your advisors through Marshall Reddick. The platform, the offering, it's one of the most valuable tools, most valuable companies that I've been a part of, and that's why I'm here today to share with you all my knowledge, my information, because I just want to give back, right? And so investing is really tricky sometimes, right? And you need to have a team around you, and Marshall Reddick provides that team. So please reach out to us, you know, ask us any questions, and we'll love to help you as much as we can.
Yeah, some of these are quick questions. Some of them might be a little longer, but first one that came up is, does HOA cover grass? Those are pretty big lots.
Does HOA cover grass? I don't believe so. On the triplex duplex, that's a great question. I don't believe so. But let me double check on that one.
Yeah, and typically too, in just Dallas and Texas in general, it's written into the tenants lease agreement. They're responsible for lawn care and landscaping, and it's kind of known that they're just going to do that. I wouldn't say it's as easy to get someone to do that in California, but in Texas, it's very common to require tenants to be responsible for lawn care and landscaping. And if there is like a HOA say, hey, the lawn's overgrown, then it's a tenant's responsibility to correct that. And as your management company, we ensure those corrections are done, photos are taken, and given back to the back to the HOA management company. Someone said, my wife and I are new to investing, want to know how to work with y'all. How can we get plugged in? We will follow up with you, Jason, after this. We'll schedule a formal call where we can meet with you and your wife, just kind of learn more and hopefully answer even more questions you may have. Someone's asking if there is just an option for leasing and managing. Yeah, absolutely. If you want to just talk about leasing and management, we can discuss that in a follow-up call and just specifically what that looks like outside of the investment purchase side. More than happy to discuss that. As I mentioned in the very beginning of the conversation, big part of what I do is really just help landlords figure out what does professional leasing and professional management look like. So more than happy to talk to you guys more about that. They're asking, what is the new leasing fee? So the leasing fee to find a new tenant is half of the first month's rent. For example, if the rent's $3,000, the leasing fee is $1,500. It's pretty industry standard. Some things to look out for if there's any companies out there that have a really, really low leasing fee, it's probably because they're doing lockbox showings where they just put a lockbox on and people reach out and they say, go show yourself. The problem with that is it takes a very, very long time to lease. There's not the personal feel, the lights aren't on. Who knows if they're locking the doors and closing the window correctly, what condition the home's left in. So it's usually not an effective way. Maybe it takes them 2 months as opposed to 2 to 3 weeks. And in my opinion, a 2-month leasing fee is very expensive as opposed to a 50% leasing fee. So things to look out for. I'd always ask, are they doing lockbox showings, or is there a licensed real estate professional that is walking through the house, getting there 15 minutes early, turn on the lights, opening the windows, has an application link that they can scan and help them fill out right there in person. What's their average lease time? Ours is 2 to 3 weeks, just like Eric said. You don't want a long vacancy. That's always important too. So someone's asking if they already own investment property and they didn't purchase it through Marshall Reddick, can Marshall Reddick still be the property manager? Absolutely. It's very common. We'd love to start a relationship with management and show you the service we provide and hopefully build up and be able to help you with the next purchase that comes along. Do you sell investment properties out of state? Yes. So the way that, I guess maybe if you can clarify like states specifically, but we have brokerage offices and property management in any of the states and markets that we operate in. So we can be your agent. Eric is licensed and he's an agent here in Dallas. And so Eric would be your main point of contact. He would be your agent. He can help you get some sales values, comps, rental comps on your property. And we can discuss that more further, but absolutely Marshall Reddick is the brokerage and the boots on the ground property management company. Someone said they are a long-time renter in Dallas, just looking for more options to become a homeowner. Eric, honestly, this is a really, really good, I'm glad someone brought this up. Can you talk more about some of these like duplex, triplex options and the ability for a renter to live in one unit and rent out the others?
Oh yeah, that's a great topic. Yeah, you can essentially buy the unit, live in one unit, and not have to put down the 25 or 30%. So you can live in one unit and then rent out the other three, and then in a year or 2 years, you can move out of that one unit and rent it out. And there's your purchase of your first investment property. So there are strategies behind that. We most definitely can talk that through with Reed Hazard, our lender, to understand your situation. But that is what we call a house hack, and that is the best way to get into investing for your first time. So I love the idea. I recommend it heavily, whether it's a triplex or whether it's a duplex. It most definitely gets you in the door, and I will highly recommend it. So we can most definitely touch base on that strategy.
Absolutely, Isaac. We will definitely connect with you after too to kind of answer some more questions along that line. And they also asked another question came in like, hey, what are other investment areas outside of Midlothian? And Midlothian was just for this presentation that we were showing you some unique opportunities, but really we obviously sell investments all over Dallas. But Eric, maybe if you want to kind of weigh in on that subject.
What was it? Other areas? What was the
Yeah,
question again?
outside of Midlothian, because I know that Midlothian's what we mentioned for the new construction opportunities, but they're asking what other areas are we seeing for good investment opportunities?
Yeah, there are some duplexes in Denton. There's some single family options in Anna, Melissa, which is that Collin County. I would say like Anna, Melissa would be considered like Moreno Valley, Orange, Riverside type area. You have Fort Worth. That's also considered. I would say that would be that's also a good area for cash flow. I try to own homes in different counties, whether Fort Worth, Dallas, Collin County, which is Frisco, Plano. But it depends on what you're trying to accomplish, what your goals are. I think that's where we can kind of sit down and talk about the different areas because there's opportunities here, especially there are builders that are discounting single family homes, like new single family homes, with offering a rate reduction in some cases for investors. But yeah, I would love to sit down and talk to you about your situation and see if we can find a deal for you.
Yeah, definitely. And I guess a follow-up note on that too, really properties on our website, we handpick and upload a lot of times for our clients. So after a consultation, let's say, hey, I just pulled out a HELOC, I have about 300,000, I want to purchase a property in cash, right? What does that look like? Now we're going to tailor a search for that criteria that you're looking for. I'm looking for something that's very cash flow heavy, maybe a C-class property. I'm okay putting a little work into it. We'll upload those specific properties along with an automated search through like the MLS. So we can definitely tailor our search for whatever the investor is looking at, and we'll always give our advice and recommendations. But we're not locked down to one specific area. It's really all of the properties are handpicked and uploaded, depending on what our investors are looking at or that client specifically searching for. So I would say it's very case by case.
Yeah.
Question. Uh-huh.
No. Go ahead. Next question. Sorry.
Oh, you're good. The question was, what are your thoughts on SFRs in McKinley?
FSRs and where?
A single family residence in McKinley, Texas.
Oh, McKinney. Oh, yeah, I love
McKinney,
the area.
sorry.
Yeah, McKinney. There's two parts of McKinney, right? There's going to be the east side, and there's going to be the west side. It's closer to Frisco. It depends on where they are, where the location is. McKinney is kind of wide and deep. So it all depends whether it's a newer development, older development. So that's an open-ended question. So like I said, I would love to kind of map it out to see what makes sense in terms of rents, age of the property, construction, builder. So yeah, there's a lot to that question.
Awesome. And obviously, Zach, we'd be happy to kind of talk more after a follow-up too. Um, Another question we had is, what are you seeing that you are managing here in Dallas most? Single families, duplexes, et cetera. I feel like we have a good mix of both. Maybe if you want to weigh into that, but I'm pretty sure we're seeing a little bit of
I,
both.
I would say both. You got to remember, Dallas Fort Worth is huge. It's 30 million people. Um, and so there's a mixture of, duplexes, single families. I know I just leased out a 5,000 square foot home that looks like a house that's in Beverly Hills for, 5,700 in Allen. So I think, there's a nice mixture of homes. So it's both. duplexes, triplexes, single families. Yeah.
Awesome. And then I think a couple people were just asking like, hey, like how can we connect on a follow-up call? We have some general information from you, but if you guys send us a message, only we can see it. If you want to send us the best contact info for you, we'll just reach out directly through that chain. Otherwise, whatever email you used to sign up is really the best contact info we have. So if there's something that's preferred, if you have a phone number, a cell, we'll reach out there. But we really appreciate all of the questions. We'll stay on here for about 2 more minutes just to let any further comments come in. Thank you, Zach. Got your info there. Looking forward to talking more about McKinney with you as well. Thank you, everybody, for joining us tonight. Eric, phenomenal job. Excited for just all of these conversations coming to follow up.
No, this is awesome. I love to do this again. I love to share my information, share my knowledge, and just give back. So, and I have an answer back for the HOA and the grass. So from the builder, yes, the front lawns and the maintenance are acre behind the back faces. The fences will not be covered, but the flower reserve area is. So this is kind of 50-50. So I thought I had a solid answer, but yeah. So
maybe
some
it's
parts
like
of the HOA covers the grass. Yes, it's because it's an
fenced
acre lot.
in. Yeah,
Yeah,
fenced in is owner responsibility. Fence out is HOA responsibility. That's what it sounds like.
yeah, correct. And so that he came back and said the answer is yes. HOA covers grass. The front lawns, yeah, basically in the flower bed area.
Sweet. Okay. Thanks, Eric, for getting that answer. And that just about wraps it up. Thank you, everybody, for staying on tonight. Have a wonderful rest of your week. Feel free to reach out to us. Take a screenshot. You got our contact info here. Everything will be sent to you within 24 hours, the recorded presentation as well as the slide deck. But feel free to dive more into those data packets, dive more into the property rating ebook, look on our website, see some uploaded properties. Eric is regularly uploading properties on our website too. So you're going to see new pics in Dallas often, more than just the ones that we showed on the webinar tonight. Those are just some cool ones that we wanted to present to you guys as some alternative investment opportunities. Anyways, thank you, everybody. Have a wonderful night, and we'll look forward to seeing you on the next one. Take care.